We talk a lot about credit scores, and the additional challenges that some Canadians face in order to build their credit, to build that score. TransUnion Canada has recently announced a tool to help improve access for newer Canadians, for younger Canadians. It is called the TruVision Trended Risk Score. And to talk about it, we're joined by Juan Sebastian D'Achiardi. He's in Burlington, Ontario, and he's the CEO of TransUnion Canada. Hello there.
Hello, Bruce. Thank you very much for inviting me. Very excited to be.
TruVision Trended Risk Score. It's a bit of a mouthful. What is it?
Yep. So let me tell you about it. TruVision is our new suite of risk solutions that we recently launched into the market. So it was developed leveraging our data engineering and proprietary variables to be able to better and more precisely predict risk for all Canadian consumers. It actually provides deeper insights into consumers' credit behavior, credit patterns, and therefore their credit worthiness. It's the sole score in Canada that actually leverages post-pandemic information to be able to cover all of the changes that we have seen in Canadian consumers since the pandemic. And what I mean about those changes is income capacity, affordability, payment behaviors and patterns, priorities of payments. So it's very important to recollect these changes and bring a new score to support the full financial services ecosystem.
Where do you get that data? It sounds like there's incremental data that you're looking at.
So we get data from several players across financial services, insurers, telecommunication companies, credit unions. So it's a vast variety of data. What I think makes the difference is the way we engineer that data, the way that we make that data talk, if you will, to be able to more precisely predict the risk.
The variables that everybody knows about that I've been talking about for years are things like payment history and credit history and utilization and public records and all those sorts of things. How would you talk specifically about some of the additional variables that you're working in here?
Yeah, definitely. So it's not about just if you paid or didn't pay, right? That's the traditional variables that people traditionally think of. We're talking about how much are you paying, the frequency and velocity of the payment, and the magnitude of the payment, amongst many others. That really creates the difference when you're taking risk-based decisions because it helps you to better understand the credit capacity that the consumer has.
Is this a separate thing, or is this an augmented version of the same credit score that lenders already have access to?
So it's a new credit score that we brought up to the market. It leverages what we called our trended data. So instead of providing a static view today of how Bruce or Juan are today in the market, we actually go backwards 18 or 24 months to see how you have been trending. Because if you're coming from high indebtedness levels to lower levels, your risk is different than if you're actually keeping your indebtedness level the same or increasing your indebtedness levels. So it's a different view that we have brought up to the market since 2017. And this is a new suite that augments what we have done in the past.
So do I have to hope that the lender that I'm borrowing from is like dialed in and looking at TruVision, or will this happen as a matter of course?
So lenders are the ones that are going to be pulling the scores. So definitely they need to pull the TruVision score. But at some point later in this year, we're actually going to make that score available to Canadian consumers through our credit monitoring solutions, as well as to the credit monitoring solutions available in the market through third parties.
This may be a hard question, but you're a data company, so maybe you'll have an easy answer. What percentage would you say is the difference between the old world of the credit score and this new one that looks at things much more holistically and over a broader time horizon? Is it a 10% difference in score? Is it a 2% difference in score?
So it varies by segment and financial product, and different lenders have different views and will get different results. But what I can tell you is definitely a double-digit lift versus traditional credit scores. I cannot give you a precise number because it varies by industry, but definitely it's double-digit.
Gotcha. So if you're at, say, 660, maybe with the new score, you're at 680, for an example, but you're not at 840 all of a sudden, and you're not at 661.
Yeah, definitely that would not happen. It's more around the probability of default is where I'm saying the double-digit lift. So that will depend on which score band you are at. So it's different for every consumer-specific case, but you're not going to see lifts that go from a 600 to an 800. That won't happen.
Right. And I'm not going from an 840 to a 899 because default risk at that level is quite low. You do talk about building credit quicker. How much quicker?
Yeah. So one of the key aspects is the way that we have engineered data actually lets us take the limited information that some consumers might have on their file and be able to provide them a score. That's a big difference from what traditional credit scores do. So I cannot tell you exactly the amount of time on how much quicker it's going to be, but what I can definitely tell you is based on the studies we have carried out, we're able to provide a score to 10% more of the Canadian population through TruVision. So that gives you a magnitude of how we're able to bring new Canadians, younger consumers into the financial ecosystem and provide them a score.
Now, talk a bit more about the benefit of that, because I think from my vantage point, the more Canadians that qualify for prime loans, the better, because they're going to have just a lower interest cost. What are some of the benefits that you see?
Yeah, definitely. So traditionally, credit methods require historical data to be able to predict future risk. And that's what it ends up impacting the rates that you actually get as a consumer. Through TruVision and being able to leverage the limited information, we're able to provide you a score quicker than any other tool. So what it means is you're going to be able to access better products at the right rates and the right amounts that your credit capacity withstands. So that's one of the big benefits that Canadian consumers are going to get. The second benefit is that they're going to be able to build up their credit profile quicker than with any other score, because as we leverage very limited points of information, we'll provide these consumers with more visibility to the financial service ecosystem, and hence they can access different products that traditionally probably they could not be seen by the players in the market.
In our work, helping people understand credit scores, there's certain things that are within their circle of control. For example, pay your minimum on time every single time, watch your utilization, make sure you don't cancel a credit card you've had for decades. Will there be some additional tips that you'll recommend that I tell people because you're looking at more data points?
Definitely. One of the key aspects is how much you make in your payment, right? So making the minimum payment is definitely one of the key topics. But if you have available cash flow and you're able to pay more, that really helps your score because it shows that you have cash availability and therefore reduces your risk. So that's one of the key items that definitely you can bring into the table to help grow or to help spur your score.
There are so many of us, you, me, tons of personal finance experts, lots of people in the credit world who are trying to educate Canadians about the importance of the score and where there are things that they can do to pull the levers to improve that score. If you could underline and bold and highlight and focus on one single thing that you just wish every single Canadian knew and understood, what would that one thing be?
It's a great question. I'll definitely tell you that it's taking the right credit opportunities that you're able to repay, right? Sometimes getting additional loans sounds interesting, but you should be aware of your financial capacity. We have heard many cases, and probably each one of us knows relatives that by taking additional loans that they couldn't afford, they go into bankruptcy. So being very conscious about your capacity is extremely important to help your credit and to actually help your financial wellness. Being able to leverage educational tools like the one that you're bringing to consumers and also the ones we have available through our solutions is very important. We provide their tips on how you could take care of your credit, how you can actually help build your credit score. And finally, I will say one of the big items is when you use credit in the right way, it actually helps your economic well-being. So using credit in a productive manner, if you're using it to build your wealth, to buy a home, those are active and good uses of credit that can definitely and will definitely help.
The credit rating system and the bureaus, it's not perfect. No institution is. But one of the places where your sector takes some heat is around corrections, errors on credit reports, identity theft. I had my own experience of needing almost a year to get identity theft removed from my score. It was a horrible situation. If you were to try and correct some misconceptions about the credit bureau world or things that you get, approached at a dinner party about that you wish people just understood, what would those things be?
Yeah, definitely. We have a due diligence task to do, right? We cannot change information without ensuring that the information that we're being provided is accurate. So we have consumer services to help customers actually and consumers restore their credit when they have been victims of fraud. And definitely those are the channels to continue using. But I think the most important aspect is that just by receiving a call to our call center, we cannot just change everything, right? We need to go and confirm with the lenders, making sure that we run the due diligence process so that we're not creating more issues for the consumer. So we have that fiduciary duty, if you will, of making sure that any change that we introduce on both ends, consumers and customer end, really represent the reality of the information that we have. So that's probably at some point difficult to understand, but we definitely take it very seriously to make sure that we support consumers with the right information and the right proofs to make sure that we're doing the right changes in their credit profiles.
Really interesting stuff. Well, I'm encouraged to hear that there's at least some innovation happening in the credit bureau space. Thank you for joining us today to talk about it. We appreciate it.
Thank you very much, Bruce. I'm looking forward to continue supporting Canadian consumers.
Juan Sebastian D'Achiardi is the CEO of TransUnion Canada. He was here to talk about the TruVision Trended Risk Score. They're throwing more variables in there, and hopefully that will do what he says and make it easier for Canadians to build credit.